Ladies and gentlemen, on behalf of Kaptify Consulting Investor Relations team, I welcome you all to the Q4 and FY26 post-earnings conference call of Bondada Engineering Limited. Today on the call from the management team we have with us Dr. Raghavendra Rao Bondada, Chairman and Managing Director, Mr. Satyanarayan Bharatam, Director and CFO, and Rear Admiral R. Srinivas, VSM retired, CEO Bondada Group. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to briefly run us through the investor presentation for the period ended March 2026, the growth perspective and vision for the coming years, post which we will open the floor for Q&A. Over to the management team.
Yeah. Good morning to all shareholders and Kaptify team. Thanks for joining this call to get more updates on last year's performance and Q4 updates and future prospects updates as well of your company Bondada Engineering Limited. Yeah. Today's presentation consists of this business overview, the future forward, and then industry tailwind, and then business opportunity, then financial performance and the highlights of Q4 as well as last whole financial year. Yeah, most of you all know that actually this Bondada Engineering Limited is into the renewable energy, is a major business segment, and then telecom, and then railways, Indian Railways, and also expanding into the rapidly into the battery energy storage system and data centers and even defense and aerospace manufacturing. So go back. So this is the first one is order book, na? Yeah, net worth of the company is around 7325. That is 732 crores. Yeah, 732 crores and around 7.8 gigawatt of portfolio in solar EPC and as well as the BESS is under execution. 1.3 gigawatt commissioned so far from the inception. And out of this 7.8 gigawatt, plus this 850 megawatt hour of BESS is under BESS under execution. But we have pan-India presence and business of excellence. Around 2,500 plus employees are exist in this company. ISO 9001 certified, and in addition to that, actually we have that WOSHAS and even ISO 14,000 certifications are also there. CRISIL A stable rating and great place to work certified. These are some of the credentials of the company. Yeah, so diversified EPC and O&M in telecom and renewable energy and BESS segments. So we undertake engineering, construction, procurement, construction of all the renewable energy projects and even telecom projects, and thereafter actually we will also undertake the operation and maintenance of the projects that we handled. And also we are ventured into the Indian Railways, where actually we are providing the passive infrastructure for their Kavach implementation. We are also into energy conservation products manufacturing, and it is backed with our EPC contracts, is a backward integration. Manufacturing of all towers and MMS module mounting structures, even BLDC motors are there, and LED lights. And we also into green construction products, that is UPVC windows and AAC blocks. And going forward, actually, we are looking for IPP of around 2 gigawatt in AP. And also, our manufacturing units are spread across in 2 states. Actually, we want to make that world class. We want to have a world-class manufacturing facility going forward. Yeah, this is what actually I'm telling. Actually, integrated infrastructure solutions across core and emerging sectors, that is renewable energy, telecom, Indian Railways, battery energy storage system, then data centers, manufacturing, and also defense and aerospace segments. Best data center and then defense and aerospace is the upcoming business segments for this engineering, Bondada Engineering Limited. These are the subsidiary structure. We have almost around 9 subsidiary companies. So a few of them are actually project-based SPVs. Otherwise, each company is its statutory body independently running. Bondada EcoBuild. These are majority of the stake owned by again Bondada Engineering Limited in this. Bondada EcoBuild deals with that green construction products. Bondada EMG deals with LED and solar street lights. Atpol Technologies deals with BLDC motors. Bondada Managed Services deals with operational maintenance services. Bondada Green Engineering Private Limited deals with complete fabrication of our telecom towers, transmission towers, and module mounting structures, solar MMS. And Bondada Renewable Energy Private Limited deals with EPC of our battery energy storage system projects. And Green Bond RE Park Private Limited is our IPP 2 gigawatt. It is a project-based SPV. And Bondada Dynamics Private Limited deals with our defense and aerospace manufacturing products. It's a diversified portfolio. Technology-driven innovation is there, and
proven execution excellence.
And sustainability focus. In-house manufacturing, strong client relationships, pan-India presence, and a robust order book is there. We will discuss in detail about the order book in upcoming slides. What is that closer order book and what is that actually we have that order book. So we have complete pan-India presence. All these, I think, actually most of these points have the separate slides. Next. These are the customer base, some of the customers, major customer base. Top line reflects that our telecom customers, and then second line is our renewable energy. And very near future, we are going to have relations with this Coal India and then NHPC and then Gujarat Fiber Grid, where we have participated some of the tenders, and we are looking forward for getting the orders from these people. Yeah. So this is the growth and expansion of this company. We started way back in 12-13, and then subsequently we ventured into the lot of manufacturing units. And 2017 we have ventured into this solar EPC, and 2023 we gone for public, and then we listed on Bombay Stock Exchange in 2023. And in fact, 2022 we won one of the biggest project from BSNL, that is 4G saturation. And since then, actually, we listed 24. We have reported a revenue of around 801 crores, and then 25 we have reported revenue of almost around 1571 crores, and now 26 we have reported almost 2843 crores of revenue, which is coming almost around last 3 years. If you see that our average CAGR is of around 90-95%, but the last 14 years of CAGR is around 53%. And this financial year, more focusing this financial year on this best implementation, data centers, and even defense manufacturing from this 26 financial year onwards. And also we want to have integrated manufacturing plant in Hyderabad. Yeah, next. So these are the This is business units. Rarendra Srinivas Garu is taking care of group operations, that is the CEO of the group. Uma takes care of renewable energy. Medi Prasad takes care of manufacturing units. Pradeep takes care of that RE park, that is IPP. Suryamurthy takes care of our telecom business, and Chanti Varanasi takes care of our EcoBill, and Ravi Guturi is the E&E, and then Jagdish is our Edpol, takes care of Edpol. And all those CEOs are supported by this key management team. These are the CTO and vice president levels. This is strategic growth roadmap for this financial year, that is FY27. So one of the major and important event which is going to come up for this company is migrating to main board, that is BSc and NSE. To enhance our market presence, and then targeting 1.5 gigawatt of EPC commissioning to scale the execution capabilities, because 7.8 gigawatt of portfolio is there, which needs to be commissioned next to 2.5 years. Out of that, actually around 1.5 gigawatt peak, which we are targeting to complete as per the budgeted timelines. And the establishment of an integrated world-class manufacturing facility to combine all our products at one place, and as well as actually need to have enhance the volumes, and need to have with the world-class facilities.
Yeah, the company has already identified land parcel for this.
Yeah, the company has already identified the land parcel for this facility, which we are going to start soon. Yeah, this I think we have been talking this Vision 2023 quite some time back actually. So we have the target of 25 gigawatt renewable energy capacity to be achieved by 2030. So this is out of our RE mission of Government of India's RE mission of around 500 gigawatt renewable energy. This 25 gigawatt again further divided into 16 gigawatt of solar and around 9 gigawatt of BESS, both BOO and even EPC scope, and strengthen our telecom leadership for Digital Bharat and 5G expansion. And this year we are expecting 5G expansion by all the private operators as well as the BSNL also, as a lot of thrust is there, and 5G expansion by providing both new towers as well as the fiber to the last mile connectivity. So wherein which we are looking reasonably good business in this segment also. And Kavach is now picking up actually that safety rail safety project Kavach, and for that actually we are providing passive infrastructure alongside of their railway tracks. Our job is to provide the communication towers across railway tracks, and then connecting those towers and railway stations and then locomotives with fiber, so that actually Kavach can be installed, and then Kavach can enable its functioning. So a lot of tenders are coming across railway zones and railway lines of this tender. As the first tender we won for this South Central Railway, and many tenders we are participating which are under evaluation. So, scaling up of data centers, we are because of our telecom experience and renewable experience, and having our own IPP power plants. So, getting into the data centers infrastructure is a very easy task for us actually. That's the reason actually we ventured into the data centers, and already as you all know that actually we have MOU with UK-based company, that Brainstorm, where their scope is that they will find out the data centers, hyperscalers data centers operators, and where in which our scope is actually creating infrastructure and giving to the hyperscalers. As a part of it, actually, we are working on two facilities, two data centers. One is in Hyderabad and one is in Vizag. And this revenues from these data centers also will add from this financial year onwards. So expanding into defense and then defense and aerospace segments as a national self-resilience, as you all know that actually is a huge thrust is there from government of India having this defense manufacturing not only for in India but even to supply even global, and which we are looking at very 2-3 very niche products that system integration and then subsystem integrations which we are targeting, and we are going to supply these systems to the all DPSUs and even Indian defense as well as Indian defense and even export also. So this is about battery energy storage system. This is actually last year we have conceived this concept, battery energy storage system. There's a huge discussions are going on in India that battery energy storage system has huge potential because of our grid stability and then peak power to manage the peak power demands. We already bagged around 850 megawatt of of orders from both Tamil Nadu and AP state, and many tenders are in pipeline. These are the annuity-based contracts, which we have to install this best container solutions at their existing substations, and which we have to install it and then maintain for next 12 years. We will get the annuity-based revenue from these best plans. So data centers, as I already explained, this is the creation of data centers for the hyperscalers, and by providing fiber network as well as the green energy solutions for their cooling and even power 24/7 round the clock power requirements. Not only just limiting to these two activities, we are also working on that actually finalize finding out the strategic spaces, the strategic locations for this data center.
So your voice is cracking up. We are not able to hear you clearly.
So?
Yes. No, we are not able to hear you clearly still.
No, since beginning it is like that, Vinay.
Yeah, now it's better, sir.
Now it's better. Huh?
Yeah, we can see the screen, so I think it's better you move to read mode.
So, am I audible now clearly?
Yes, sir.
Okay. So next. Yeah. This is again another new segment, that is defense sector. Entry into this aerospace and UAVs, and then a lot of naval subsystems and even airframes subsystems. That we are very seriously working on it, and even actually in fact we are also looking at inorganic growth of even merging the small companies which are already there in this space and where they need some push on actually expanding this thing, and which we are making due diligence of with 2 companies, and we would like to take over majority stake in those 2 companies. With that, actually, we can scale up in this defense and aerospace segment. Yeah, next. Yeah, these numbers. I think most of you know that actually when you see that last year, that is 2024, 25, last year numbers, you see that total peak demand, power demand was around 240 gigawatt. But whereas expected to rise this power demand by 690 to 700 gigawatt by 2036. This is one target which is giving us huge potential for next 10 years. Even other than this, actually, also the 500 megawatt of renewable energy target by 2030 that is there, and even battery energy storage is there in India. So I think there is no problem in power segment. There are a lot of opportunities, solar, wind, and even power, this battery energy storage and pumped storage, and associated a lot of other product manufacturing, even green hydrogen. So many things are going to evolve here in this segment. I think we are well positioned in this, and actually we will continue to excel and continue to perform even on future projections and projects of this power segment, especially in renewable energy. These are some of the numbers actually. They have, as per industry, India energy transition from solar plus best opportunities for this thing. Yeah. Yeah.
Yeah. So, good morning once again to everyone, and good morning, Vinay and team. So, coming on to the financial highlights, we would like to give you some information on the finances. So, we are backed up with a strong order book and order book in pipeline. In terms of the total order book, we are sitting on 7,147 crores of order book as of 31st March 2026. With a breakup of majority sharing. Okay, majority share is coming from again renewable energy with almost kind of 4,536 crores, which is close to 65%, and then followed by BESS about 1,463 crores of two major projects, and then
Oh
followed by
my God, 2 crore.
Continue, sir.
Very much big amount.
I think there is some cross
Sir, 1
connection.
minute. I don't know. Just hold on. Yeah, you continue, sir.
Or maybe you can make everyone mute by default if you can make.
Yeah, I'll do that. I'll do that. You continue, sir.
Otherwise, my voice is clear, no, Vinay?
Yes, yes.
Okay, okay. And then followed by Indian Railways and so in terms of order book for AP 2 gigawatt IPP projects, we are having 9,000 crores of order, which is in pipeline now.
Okay.
So land pooling.
Very, very good.
Land.
Mr. Parv, it will be good if you stop unmuting in between. Otherwise, we'll have to put in the waiting room. Yeah, go ahead, sir.
Next. So this is the more of a geographical order book allocation. If you see this overall 7,147 crores of breakup, the majority is in Maharashtra, Gujarat, Tamil Nadu, and Rajasthan, AP, and then followed by Telangana, Uttar Pradesh, and Karnataka, and then followed by Kerala, Bihar. Basically, we are is more of a renewable energy project current status, which state and what is the portfolio we are having. You see in this Rajasthan, we have almost a kind of 1,134 megawatt peak, which is projects are under execution. In Rajasthan, we are having NLC and NTPC as our customers. And in Gujarat, if you see, it's almost a kind of 1,800 megawatt peak in capacity. In Gujarat, we are working with the Adani's, NLC, and even the KP Group. And in Maharashtra, if you see, we are almost executing 568 megawatt peak DC capacity. In Maharashtra, we are majorly working with Agenco. And also we have one client, the private client by name PMK. So we are almost working 142 megawatts for them. And in terms of Telangana, we are working for Singareni College, which is under execution. It's almost completed now. So we will be starting this project mostly next 1 to 2 weeks of time. Uttar Pradesh, we are having works with NTPC, which is about 435 megawatt peak, and are expected in Uttar Pradesh from same clients. And in AP Telangana, AP and Tamil Nadu, we have battery energy storage system projects, which we are working for government. And these two are under execution at this point of time, totaling about 850 megawatt peak. So these are the key highlights of last year, financial year 2025-2026. So from existing sectors EPC, it is on solar EPC, we have commissioned almost a half gigawatt of projects. And this year we are targeting almost a kind of 1.5 gigawatt of projects to get commissioned. And a cumulative commissioned as of 31st March 2026, if you see, it's close to 1.3 gigawatt peak. And if we complete 1.5 gigawatt in this year, so by end of this year, we will be having almost commissioned projects of 3 gigawatts. And in terms of telecom, if you see, we have BSNL towers installed as of now about 1536 numbers, and on air, which is getting radiated, is about 1506 numbers. It's almost 99% strike rate. And in terms of emerging sectors, we are now seriously focusing on battery energy storage systems, wherein we have already got 2 projects, and we have participated in 3 tenders as of now, which are yet to open the tenders. And a lot of efforts are going for this BESS in terms of both BOO model as well as in EPC model. In terms of data centers, we had one MOU with the Bridgestone Corporation based out of Dubai. Dubai. And one assignment is currently happening. We will be informing you very soon about this assignment. And our focus areas are
So I think you'll have to. Your network is
Yeah,
coming
yeah.
back, sir.
Pardon?
Can you just stop the screen share and start it again? Please.
అస్సలు బాగాలేదంటే మన మీరు డెడికేటెడ్ పెట్టాలి దీనికి పనికి మళ్ళీ దానికి ఇంపార్టెంట్ ఈవెంట్స్ అని దగ్గర really need to sort out your network problem. Last time also same problem was try to have a line, not shared Wi-Fi for Kangal.
So shall we move to the Q&A, sir?
Yeah, we'll just run through the numbers once again, Vinay. Maybe give me another 3 minutes time.
Yeah.
Is it okay now? Voice is good now?
Yeah, sir, but it drops off. It drops off in between, sir. Problem is that. I would request participants just be patient. Somebody's messing around on the screen. Can you please stop doing this?
So to measure the
So your voice is really very bad, sir. I would suggest if you can just quickly run through the presentation. You can just speak up, sir.
Yeah.
So your presentation is taking up the bandwidth. Your voice is not clear. I would suggest if you just speak up.
Just close it.
So,
Start. Are we audible now?
Yes, sir. Now you're audible. Let's just quickly speak. Let's not run the presentation since it's taking up your bandwidth, sir. So you can go ahead and speak, sir. We'll just take up the Q&A. Hello. Yeah. We'll take the first question from Randir Singh. Randir, you can go ahead, please.
Yeah, Ranjit, please go ahead.
हेलो सर, आवाज आ
Yeah.
रही है मेरी?
हाँ जी.
Yeah.
सर, मेरे मेरे 3 सवाल हैं सर। FY27 में रेवेन्यू गाइडेंस क्या रहेगा ओवर FY26 एंड नेट मार्जिन हमारा क्या FY27 में बढ़ सकता है, नेट प्रॉफिट मार्जिन, और अगर बढ़ सकता है तो क्या, क्यों बढ़ सकता है, ये 3 चीज मुझे जानना है।
Yeah. So, Randir ji, I think you have seen that order book around 7,200 crore is there in existing, and
Mr. Rao, we are not able to hear you.
Yeah, please.
Please go ahead.
yeah. Uh,
Ranjit Singh.
Randir ji, actually, if you have seen that our presentation, our order book is standing at around 7150 is 7150 crores are there, which we have to deliver in next 18 to 20 months time. So that is one thing, and even ongoing orders are there, which are going to add to our order book. So, having said this, maybe anything around 60 to 70% of revenue growth will be there, even coming financial year. And most of these contracts are long-term contracts, and this profitability is going to be almost in terms of percentage is going to be the same, or in terms of absolute number, and you see that this same almost around there also around 60 to 70% growth is going to be there from last financial year.
सर, ऑर्डर बुक आपके पास है तो आप बता सकते हैं कि नेट प्रॉफिट मार्जिन कितना बढ़ सकता है इस साल?
No, that's what I'm telling ना, actually ये साल में you have seen that our net profit is around 211 crores, so उसको ऊपर around 60 to 70% growth रहेगा as a absolute amount.
50 to 60% ग्रोथ बॉटम लाइन में?
Yeah, bottom line.
थैंक यू सर। मुझे कुछ और क्वेश्चन पूछना होगा तो मैं बाद में पूछता हूँ।
Thank you. We'll take the next question from Nishita. Nishita, you can go ahead, please.
Yes, hello.
Yeah, please go ahead.
Yeah. So, sir, you mentioned that we also have ongoing orders. So, if you can let us know what is the current order book pipeline?
Yeah, so in addition to the existing order book of around 7150 order book, and anytime actually which we are tenders participation is around 25 to 30,000 crores, but our strike rate is around 20-25%. But currently we are almost sitting on around 2850 crores orders L1, which we are going to get in the first quarter.
Okay, so 2850 crore of L1 orders, and any time we participate in 25,000 to 30,000 crore of order book, right?
Yeah.
And the win rate is around 25 to 30%.
You're right.
Right. And my next question is on the new facility. If you can let us know more about the facility. You mentioned that we already have the land parcel for that. So when are we going to start the construction on the facility, and what is the facility going to be used for?
Yeah, so this facility is primarily to integrate all our manufacturing units, that is renewable energy products, that is MMS structures, even transmission towers, even our battery energy storage system facility with new technology, that is vanadium technology. So we have already identified around 27 acres nearby Hyderabad, and this plant construction will start anytime in the second quarter of this financial year.
Okay. And what will be the total capex for that?
Sorry?
What will be the total capex for this new facility?
So capex would be around 120 to 130 crores.
122 crores.
Including cost of land.
Including cost of land.
122 crores, right?
Yeah.
120 to 130 in between.
120 to 130.
Okay, understood. And like, what is the increment revenue that we can get from this facility?
So whatever that actually we have projected for this financial year, and even going forward for next 5-6 years, it will cater those revenues. When you see this, actually our existing business versus even new initiatives that we are doing, that we are thinking for next 4-5 years, that ratio of that revenue add, that revenue constitution is almost around 30%. So for that reason, actually, this plant will make advantage for us in future.
Okay, understood. And when will we commission this plant?
Takes 1 year, Ishita.
1 year. So we'll expect any incremental revenue from this facility in FY28.
Oh, not required. We already plotted that this financial year numbers without this plant. This is for future.
Okay.
Yeah, next year onwards, there is going to be some incremental revenue, Nishita.
Okay,
Yeah,
understood.
that is already considered in our business model.
Okay, thank you so much.
Thank you.
We'll take the question from Mr. Prem Kumar. Mr. Prem Kumar, you can unmute and go ahead, please.
Yes, sir. Sir, congratulations on the great year, sir. So we hope same would continue. Sir, my question is on one of the biggest orders for you, that is from Adani, around 1,050 crores, which was disclosed in the earlier presentation as well. Just wanted to check on the status of the project, sir, whether the specific of the project, sir, whether the land has been allocated, what exactly is happening, supply has started, all those things, sir. And also I want to highlight, sir, this presentation was not shared to on BSc website, sir. Maybe after this call.
It's shared just 30 minutes before.
It is shared. You can now check and actually you can download it now. It is already shared.
There is a little delay
Sir, got it,
because
sir.
of some technical issues.
Yeah, we have already shared that presentation in BSc. You can check it and verify. That is number one. Number two is Adani order, which we have received a few months back. That is already under execution, because actually after having the land and after having the connectivity only, Adani is allotted the project to us. And this is in midway. This plant needs to be commissioned by next March. So already I think we have executed around 20%, even few crores, I think almost around 70-80 crores. Even billing is also
Payment also received.
Billing is also done with Adani. It is under full swing. It is under under construction, under WIP, and which we are in fact, as of now, actually, which we are little ahead of timelines of this project.
Thank you. We'll take the next question from the line of Mr. Moiz Khan. Mr. Moiz, you can unmute and go ahead, please.
Hello. Good afternoon, sir. Good morning. So my first question is, till last year, our target for 2030 was to achieve 10 gigawatts of capacity, and last year we upgraded it to 25 gigawatts. So initially, our target revenue for 2030 was $1 billion. So, are we going to expect any additional revenue as well, because the target expanded by 1.25 times? So can we expect similar revenue expansion by 2030 as well? So
No, I think $1 billion revenue in commensuration with 25 gigawatt only, because in 25 gigawatt, most of the orders are coming from EPC. EPC segment, that is also BOS. So I think $1 billion revenue in commensuration with 25 gigawatt of target only.
Okay. And sir, we got the Adani order, I think, in the month of August last year. So are we expecting any follow-up orders? So I read in the news that Adani is also expanding massively in BESS segment. So are we expecting any orders in that as well?
Yeah, but this is actually once it is commissioned, the first order actually immediately they are going to give. And now we are already discussing with one more follow-up order, actually repeated order. And Adani orders are going to come for next 3 to 4 years continuously.
Also, sir, in revenue, our guidance was to achieve around 3,100 to 200 crores, but we ended up with 2,800 crores something. So, like, in which segment did we lack to? I mean, I think we were projecting 100% revenue growth, but I think we ended up achieving 80%.
They never given kind of.
So I think Moise, maybe that is your assumptions. You never given 3,100, 3,200 very specific.
Like we were expecting 100% growth, no, sir, like year on year.
We are always giving around 80 to 90% growth, but almost all the segments have actually performed well this financial year.
100% is generally the expectation from the well-wishers like you, Moise.
Thank you, sir. So next year, are we expecting like around same 80% or it's going to be lower?
Yeah, maybe around 70%.
60 to 70% can be expected for this year.
Okay, sir. Thank you very much, sir.
Thank you.
Thank you, Mr. Moise. We'll take the next question from the line of Urmish Shah. Urmish, you can unmute and go ahead, please.
Yeah, am I audible?
Yeah, you are audible, Mr. Umesh.
Yeah. So thank you for the opportunity. My first question is on the data centers. Could you just throw some light on the MOU with Branston Inc.? What is the revenue potential are we seeing, and how does the margin profile look for particularly data centers?
Yeah, so with Brainston, I think during that presentation, I already explained with Brainston, our MOU says that actually Brainston brings the data center hyperscaler operators, and we here setting up the data center and handing over to them, including both connectivity and power connectivity as well as the communication connectivity as a fiber network, and having strategic location, and even making the shell out of these data centers. So one assignment is already on right now, and this revenues from these data centers, around 7 to 8% of our total revenue will be constituting this financial year. Around 7 to 8% of revenue from data center will constitute in this financial year. And coming back to the EBITDAs, as of now, anything that takes EBITDA of around 14 to 15%, we are looking forward for this data centers.
Okay, and that will be the run rate going forward also?
Yeah.
Okay. So the next question is on defense. What was the rationale behind entering the defense sector? I do understand it's an emerging sector, it's an evergreen sector that way, but why are we focusing diversifying into defense rather than focusing more on data centers and our core expertise?
Yeah, that's a good question, Mr. Urmish. We right now our ratio between the EPC contracts and the products is about 90 to 10, which we would like to upgrade towards products with a ratio of 70 to 30. So in the products, possibly the best the product array that you can have is from the defense, where your margins can be higher. And plus, we also were actually keenly looking at intellectualize our products rather than being in the regular like exclusivity products to a few exclusive intellectual property based like products. So that is like defense fits in that particular aspiration of ours very well. And that's the reason for like getting into defense.
So, but sir, those as I see in your presentation that you mentioned critical components. Could you just give some more color on what type of components are those, and whether it will be low value, high margin? Is that the way we should look at it?
Yeah. To start with, these ones will be medium value, and then like larger numbers, which are our first order that we backed was actually a missile component for the prototypes we have supplied. On successful completion of the trials, we will be getting multiple orders for this like regular production. So that like value of that component is a very high precision medium value item, that is. Or typically, if you do an ABC analysis, of course, it comes under, class C, category C kind of a thing. And we will be slowly graduating to, higher categories of products.
Right. So one final question before I join back. This quarter we have seen a slight dip in the margins. Could you just throw some more light on it? What was the reason?
No, but if you look at annually, it is actually higher.
Annually it is increased, but
Cumulatively, if you see
specific
Yeah,
to
I
your
do see
question.
that, sir. But if I see YOY also, Q on Q, it's been a slight dip. So I just wanted to know if there was some particular reason for that, or
Yeah, there are two major reasons, Varmesh ji. One is in the last quarter, actually, we have booked some low margin projects billing in this fourth quarter. And
okay.
second reason being there is a little increase in the material costs, particularly in terms of renewable energy. Steel and cable prices gone up little higher. So because of that also, there is a little increase in the cost of material. These two actually ended up in a little dip in this last quarter profitability. But if you see in the overall revenue of the overall profit of the year, it is absolutely it is increased by almost a kind of 30 base points.
Yeah.
Last year
Okay,
we were
sir.
at 7.2%, and this year we were at 7.5% close to.
Right. Okay, sir. I'll join back for further questions. Thank you.
Thank you so much.
Thank you. We'll take one question from chat from Mr. Ayush Sharma. So he says, how are we generating 200 crores in revenue from 120 crores of plant and equipment? And also, receivables as a percentage of revenue still remains elevated at nearly 27 to 28% of revenue. Do you still see the same trend continuing?
Yeah, in terms of receivables, answering to the second question, 27-28% of overall revenue in receivables is very quite common in any EPC company. In fact, it is better actually. Generally, for any EPC company in the industry, it is ranging from 30 to 35%. So we are managing very well in terms of working capital management. That too, if you see on the numbers, we are operating cash flow, we are positive by 125 crores. And in terms of net debt also, if you see as of 31st March 2026, the company is hardly having any debt. Only in terms of classification, we are showing some debt on balance sheet. But otherwise, if you net it off, we are still having cash surplus of about 100 crores. After netting of all the debt, still the company is sitting on 100 crores of cash positive. So that way we manage the working capital very well.
The first question actually, that 120 crores investment, 200 crores, we don't understand.
No, actually what they're asking is this integrated plant. We told 120 crores of investment, but we never committed on the 200 crores of revenue. And it is
even if you look at the today's BGPL annual sales is about 200 crores.
Correct.
This BGPL is going to be possibly about 1/3 of the new integrated plant.
Correct.
Even if you just go on then replicate the same existing trend, it's going to be around 200 plus crores.
600 plus crores.
Yeah.
Threefold.
Even if you just do this part alone, then it's going to be at least around 200 crores.
Correct.
But there are a lot of upgrades that we are looking at. We are adding additional facilities also to manufacture high precision items, even for defense. And then also, if you look at the new, the battery technologies that we are, foraying into, all those, like high precision, like reactors for these, best plants of, like newer technologies. All those things are going to be manufactured in this facility.
Yeah, to clarify.
So possibly you would have brought in the 200 crores from the present BGPL or this fabrication plant that we have, that revenue.
Correct.
Am I right?
But otherwise with this 120 crores of, he's in charge, sir. With this 120 crores of capital investment, to give you a single answer, it can generate up to 1,500 to 1,800 crores of revenue per annum.
Yeah, going forward.
Going forward. When I hope we clarified that point.
Yeah. Thank you, sir. We'll take the next question from the line of Mr. Ayush Sharaf. Mr. Ayush, you can unmute and go ahead, please. Mr. Ayush?
Ayush Sharaf, yeah.
Hi,
No, no.
am I audible?
Yeah, Ayush, you're audible now.
Good morning, and congratulations on the results. I just had a question on the current liabilities. The current liabilities of yours, I think, jumped from 171 crores to about 501 crores, which is about a 330 crore increase. Can you confirm how much of this is customer advances and from which specific projects? And obviously, as you execute against these advances in the next year, and receivables from those same projects accumulate before the final payment, your gross working capital requirement will expand significantly. So, like, what's your peak working capital requirement in about the next year, and how are you funding it, whether it's advances, bank lines, internal accruals, and also the average collection period from your PSU clients like NLC, NTPC, how is that changing, and how will that change over the next 12 months?
Okay, so I think you have three questions. We'll clarify one by one. One, on the other current liabilities, we have two major components. One is advances from customers. As of 31st March 2026, we have advances from customers to the tune of 150 crores, which is a component of this 500 crore. And the second one is actually we have started using this TREDS facility to fund some of the MSME payments, MSME suppliers and vendor payments. So because of these two things, actually it got shot up from 170 crore to 500 crores. Both are actually particularly for working capital management, and both are giving a better results in terms of fund cost management.
Got it.
That's your point number one. And can you please tell me the second point? I did not get the second point for you.
No,
Um,
it's how we are going to manage your working capital
Yeah.
cycle.
Okay. That is on the working capital cycle. And third point, what you have asked is on the collections from the public sector undertakings like NTPs and NLC. As of now, our experience is we are getting very good payments from these PSU companies, not only NLC and NTPs, even from Singareni Collieries, even from Mahajanko. We are managing the working capital of about 85 to 90 days with these companies. And we are sure that we will be continuing the same working capital cycle even for the PSU companies. We are not seeing any kind of challenges at this point of time.
Got it. Yeah.
In fact, in the last quarter, major collections we have achieved from NLC, NTPC, and Adanis. So that way we are comfortable, Ayush.
Okay, great. I just have one more question on the AP 2 gigawatt IPP project that kind of is worth like 9,000 crores, which has been disclosed but excluded from the official order book. So is this order confirmed or contingent? And if it's confirmed, then what's the equity capital that Bondada needs to deploy to execute it? Because if it requires like a QIP or a rights issue, then I guess we'll need to understand that dilution risk.
Yeah, it is a confirmed order book for sure. It is 9,000 crores of order book is confirmed. It is on hand at this point of time. But why we have not included in the 7,100 crores is because it is separately seen as an SPV. This is a special purpose vehicle for which we need to install 2 gigawatt of plant. And since it is already on hand, we are showing it separately. That's your point number one. And coming to second point, equity infusion in this project, it'll happen on a phased manner. It will not happen in one go. So out of this 2000 gigawatt, we have a timeline of almost 3 to 4 years of time.
Okay.
So our idea is to start with, once we pool the land and get the connectivity, we will be installing a 250 megawatt of plant to start with. Once we complete that, then we will be adding another 500 megawatt. Likewise, over a period of till 2030, we will be installing the entire 2 gigawatt, which will be giving revenue generation from 2031 onwards. So if you see in this phased manner, first 250 megawatts, we will be requiring close to about 250 crores of equity infusion. So for 250 crores of equity infusion, we have a lot of avenues. We have no issues on that. And moving forward, as we go along, based on the timing and all, we can raise the equity which is required for the IPP 2 gigawatt.
Got it. Okay.
Yeah, we have a plan for that.
Okay, great. And if I just may ask a quick last question. So you said that this last quarter EBITDA margins came down because of these low margin projects that you all did. Is that kind of a structural pressure from larger project sizes with thinner margins, or like what's your EBITDA margin guidance that you would say for the next year? Is it like towards the 10.5%, or will it be back to about 11.5%?
EBITDA margins for this year will remain same, or maybe we will have little improved margins of by about 20-30 base points here.
Okay.
Because as you know, whatever order book we have as of 31st March 2026, the 7,200 crores,
Yeah.
all projects are yielding good margins. So we don't see this kind of fourth quarter dip in coming this year.
Okay, perfect. Thank you so much.
Thank you. Thank you, Ayush.
Thank you, sir. We'll take one question from the chat from Mr. Prathamesh Sawant. What is the expected execution timeline for BESS orders, and what is the expected IRR on BESS orders for the company? Also, what are the IR for the clients who are investing in the BESS? Is it economical viable now, or the orders are policy driven? What is the customer profile for BESS order?
Yeah, so huge. It's surrounding between best projects. So this execution timelines is another one project is we have two projects. One is 400 megawatt hour in Tamil Nadu and 450 megawatt hour in AP. That 400 megawatt hour needs to be completed next 1 year, and then 450 megawatt hour needs to be completed next 18 months time. So for these two projects, IRRs are ranging between anything between 13 to 14%. And the first project, Tamil Nadu, is already financial closure is done, and then Canara Bank is funding for this project. And AP project, financial closure is yet to done. We have the time because recently we made the Best Buy agreement, and banks are in many banks are in line to give us the funding. And these two projects are absolutely in line with the framework of MNRE guidelines and then MNRE guidelines. Even these two projects are having that VGF facility also from the MNRE. So these two, okay. Whatever that we are having two projects, it is very viable. And
in terms of IRR, it is 13 to 14%. And in terms of timelines, what he is asking is this Tamil Nadu we will be completing in this year, hopefully. And AP might, I think it will take next year of first half.
First half.
Okay, sir. So there's one more question from him. What is the cost of 100 megawatt hour for customers, and what is the EPC portion of that?
Solar or BESS?
BESS. The question is not clear, Vinay.
100 megawatt hour cost.
No, so what is the cost of, so he's asking what is the cost of 100 megawatt hour for the customers?
Actually, Vinay, that all depends on so many parameters.
Yeah.
It all depends on the scope of work, what we agree with the customer. So maybe what we can do, if at all we can meet sometime personally, we can explain him everything here instead of answering in the call.
We may not able to tell that actually what is the cost of per megawatt hour in this public forum, because actually is something it is confidential. And second one is this all, as Satya told, that this all depends upon the scope of the work actually. But everybody knows that actually what is the battery price of per kilowatt now actually is anything
for the customer, the cost is only the tariff.
For customer, it is a tariff. For us, it is the EPC. EPC depends upon the various parameters and specification of the customer. Why? Because actually a lot of specifications are prevailing around this actually. Is one single cycle, 2-hour storage, 4-hour storage, augmentation, so many things actually. AC scope, DC scope, so many things are there actually. I think we will able to explain him in one-to-one, may not be in this forum.
Sure. Thank you, sir. We'll take the next question from the line of Shainik Mehta. Shainik, you can unmute and go ahead, please.
Hi. I wanted to understand how you see this Bondada engineering company in terms of the positioning. You were always seen as a EPC company. Now with this 2 megawatt of IPP, 2 gigawatt of IPP, and also the 850 megawatt of the BO project, this will certainly shift very significantly. So what is the expected, I know you answered a bit of this in terms of the overall CapEx and the projected IRR, but do you see these two parameters moving significantly in the next 2-3 years because of these two projects?
Next 2 years, still EPC is going to be a significant
Revenue contribution.
revenue contribution, EPC. Maybe in after 2 years, actually, this IPPs also will add, but actually going forward, EPC is the major actually. If I can say that by 28 financial year or 29 financial year, EPC is still 50-60% is there. Even IPP contribution will come around 20 to 25%. Rest products will occupy another 15 to 20%. These are the contribution that we are looking at.
Even for our IPP projects, the EPC will be done by another arm of ours. So, like this will also be, parallelly increasing.
Yeah, but the capex requirement are quite large. So the typical IRRs that you get in EPC are over 30%, whereas the typical IRR that you get for IPP projects are typically around 12%. So that significantly changes the flavor of the company. So you see that this will happen not in the immediate next 1 or 2 years, but more in the 3 to 4 year framework, right?
Yeah, but the addition of exclusive products and again like foraying into defense is basically to set that balance and then to keep up the IRRs.
That's point number one. Second point, in terms of best projects, BOO projects, the IRR is at 12 to 13%. But in terms of solar plants, IPP solar plants, that IRR would be anything in the range of 17 to 18%. So that's again going to compensate our overall margin framework.
Okay. And is that similar expectation for the best projects also?
Yeah.
Best actually, whatever is that IRR mentioned, that like around 13% is for taking into consideration the plant life of 12 years. But there's going to be substantial life even beyond. If we're able to develop a model where we are going to exploit the infrastructure from that, it is going to be much more.
Okay, thank you.
Thank you, Shrenik.
Thank you. We'll take the next question from the line of Karthik Jain. Karthik, you can unmute and go ahead, please.
Yeah, hi. Are you able to hear me?
Yes. Yeah, Karthik, please go. Good morning.
Yeah, hi. Good morning. I just wanted to check in the segmental breakup in FY26 that you have given, there's a significant drop in the services revenue. Now, what I understand is that the services revenue typically is the O&M segment part of your revenues that comes in. But it has declined from around 356 crores to about 140 crores. And I think that is one of the primary reasons for the margin profile that has changed in the last year. So is that understanding correct? And what has happened in that segment particularly? And is it going to be that going forward as well?
In terms of services, you are asking on the segmental reporting, right?
Yes.
Okay. In terms of segmental reporting, what happened is that some of the services actually we have included in this EPC services because it is predominantly into EPC. But otherwise, overall, whatever services we mean here is only O&M services.
Yeah, but O&M, has it declined over in FY26 as opposed to?
It has increased. O&M is increased. In fact, O&M is increased from 90 crores to almost 140 crores. 140 crores. O&M is not declined. I think you are referring some wrong numbers. There is no decline in services. As EPC, it is a service actually. It is not a product actually. As EPC itself is a service.
Okay, because in your quarterly reporting on the consolidated basis, the segmental reporting has been given that way.
No,
so
maybe we will also recheck.
Have a look at it. Yeah, correct. So that is the first question.
Yeah, what's your second question?
Otherwise, as a margin profile, it doesn't change actually. In fact, it is improved. It is improved from last year.
He is referring to the last quarter.
No. In whole year also.
Whole year.
Yeah.
Yeah, whole year is also whole year is improved. But I think that segmental reporting of the services we will check. But actually, there is no dip at all. No, there is no dip at all.
Okay. Second is on the receivables part. What is the aging of the receivables? Because it is about 760 crores. And how much of it is
I think somewhere it mentioned is 87 days here. That average aging is coming to 87 days.
Okay. And all are considered good, right?
Of course. Yeah.
Okay.
There are few outstandings which is more than 1 year, but that is as per the payment milestones.
Okay, got it. Third is regarding the BESS. I mean, is there any meaningful revenue that we are expecting in FY27?
Yes. Yes.
And what
FY
percentage of
27.
your revenues would be that approximately in
No,
FY27?
actually, in
FY27 as EPC, yes,
yeah,
it will.
Yes.
As IPP, I think that will start getting generated from FY28 first quarter.
Okay, got it.
As annuity revenue, actually, we will get it from next financial year onwards, but as EPC, we will get in this financial
In
year.
this financial year. Okay, got it. And what about data centers and defense and aerospace? I mean, is there any meaningful contribution this financial year? I mean, in the current one, FY27?
Yeah, definitely it will get start from this financial year, but it will it is going to be go up in next 3 to 4 years. But definitely these two segments is going to contribute from this financial year onwards.
Got it. And in defense specifically, we are going into precision manufacturing, is it? So we are actually going to do the manufacturing part.
System manufacturing of mechanical systems is only one of the arms.
Okay.
We will also be working in RF. We will also be working in composites. We will also be working on the missile shields and these kind of things. And we will also be doing, to start with, a few like subsystems for like larger systems in the RF and then microwave segment.
Okay. Got it. Great. I think that is all from my side. Thanks a lot. And best of luck.
Thank you. Thank you.
Thanks, Mr. Karthik.
Thank you, Karthik. We'll take the next question from the line of Mr. Sunil. Sunil, you can unmute and go ahead, please. Mr. Sunil, you can unmute and go ahead.
Hello, can you hear me?
Yeah.
Yeah. Good afternoon, sir. Just going back to the Q4 margin, which you said it is like one-off because of the raw material prices and pressure on raw material prices. It has went down. So can we expect, say, between 11 to 12% of EBITDA and 7% of PAT going forward?
Yes, very comfortably.
Yeah.
Comfortably.
Also, I think. Yeah. Thank you. Also, I think you have mentioned in your earlier con call that you will be cash flow positive, and we can see that the cash flow is positive now. So can you can you throw some light on how cash flow become the positive?
Of course, yes. So during the fourth quarter, if you see, our major focus was on collections of receivables. Only during the fourth quarter itself, if you see, we have almost collected more than 1,000 crores of total receivables. And in the month of March alone, we have collected almost a kind of 457 crores. So which made us to become cash positive from operations as of 31st March 2026. That's point number one. And second point, actually, the last quarter of last year, we have started using TREDS facility for making payments to this MSME suppliers and vendors, which is giving us a 90-day vintage to make the payments to the TREDS, and that too with a very cheaper cost of finance. These two actually made us to become cash positive as of March 2026. And we expect to continue the same kind of cash from operations even for this upcoming quarters. You got it, Sunil? Hello?
Hello, I think I got muted.
Yeah,
yes, sir, I got
Is it
that.
okay? Yeah. Thank you.
Also, a last one, if you can. So out of this 791 crores of receivable as of 31st March, how much is kind of received so far, because we are almost at the close of April?
Out of 790, yeah, as during this last 24-25 days, we have collected about 130 crores.
Okay. Yeah. Thank you, sir.
Thank you.
Thank you, Sunil. We'll take the next question from the line of Suryansh Gupta. Suryansh, you can unmute and go ahead, please.
Hello, good afternoon, sir. So my one question to you is, in Andhra Pradesh, there is a lot of booming in data center sector. So is there any major project or any major group of which your order is in pipeline related to data center?
Yeah, I think that's what I'm keep on explaining, that actually we are already working on one assignment in Hyderabad itself, and we are already in touch with almost all the hyperscalers for their fiber connectivity and as well as the power connectivity, that round the clock power requirements, and even even to establishing their shell data center shell. So we are already in touch with all the hyperscalers.
Okay, sir. Thank you, sir.
Thank you. We'll take the next question from the line of Apurva Raj. Apurva, you can unmute and go ahead, please.
Hey, am I audible?
Yes,
Yes.
you are audible.
Thank you for the opportunity, sir. Sir, regarding the Bell order, I understand the revenue is 4 million INR. I wanted to know a few more details as far as the timeline of execution of this order and what is this critical component exactly being talked about, if you can share it with us. Also, where is the facility that you are planning to manufacture this critical component? And my second question related is, do you have an operating vision for the defense play in your business till 2030?
Yeah, Mr. Apurvanj, the component, the first question, the timeline is the execution time is another 3 months for it. We will be supplying the item in the next 3 months. And coming to the component, this is for a missile, a critical component for missile, which till the time the trials of the missile are executed, we wouldn't like to reveal exactly the component, which we are bound by an NDA with Bell for this. And once on successful completion of trials, there will be regular, production, mass, production for this. So there will be the requirement of multiples, and for this particular component. So that is that. And we are going to add a similar more such, products in the next few years to come. That, if you look at, is the large number items, and we will also be in our product line for defense. We also have like subsystems and also in the pipeline. So by about 2030, if you're talking about by 2030, we may also roll out a few products actually for direct use by defense forces, as well as subsystems for defense PSUs.
Okay, sir. Thank you so much.
Thank you, Apurva. We'll take the next question from the line of Pranav Goyal. Pranav, you can unmute and go ahead, please.
Thanks, everyone, and great set of results. First of all, my first question is very similar to what has already been requested. I think there is something wrong with the segmentation in the what you're provided to exchange, because the consolidated services revenue goes down from 315 crores to 30 crores, which is not understandable. So probably you need to have a look at it. But on the other hand, if you can also provide in your presentation, if you can add or if you can provide separately an understanding of what comes under EPC services and products, it'll help individual investors a lot. That's one point. Second thing,
we'll come back to you on this, Pranav.
Yeah. Second thing I wanted to understand is you've mentioned there has been some impact on your margin in Q4 because of the increase in cost. What we've seen is the real increase of cost has happened in April with respect to steel or whatever. Do you expect this quarter will also have some impact on the margins because of the increase in energy and the commodity prices? And are your contracts pass-on contracts, or you need to absorb the increase in cost once your contracts are already closed? And before locking down, my third question is, recently there has been some BESS contracts which were awarded by NTPC, and I think one to Coal India, and I was not able to see Bondada, even though they were in the region of Telangana and Andhra. Were you part of these tenders, or what was the reason why Bondada was not a party to these tenders?
We will answer your last question first. most of the best contracts awarded in the recent past to various players in the BESS are actually like mostly like unviable. So we have cautiously not participated in some of the tenders, and then also wherever there is a reverse auction, we have halted at a particular point there. So like that answers your last question, and our CFO will be addressing the first three
Continuing to the
questions.
sir answer, actually, though we have participated in tenders with NTPC for BESS, because of our pricing, actually we were not L1, and we don't want to we have no regrets for that, because those projects are anyways unavailable, as told by our group CEO sir.
And as of today, in the BESS space in the country, the RFPs issued by us are some kind of an industry benchmark. The people do follow the RFPs issued by us, and then the conditions for this life cycle sustenance, and then the warranty model that we have put are being considered as one of the best by the industry. And if we take a conscious call that be below this, it will not be viable, and you will not have assured IRRs on that one. That is, you can take it for granted, is one of the best like industry judged remark.
Yeah, purposefully, intentionally, we are staying away from that.
The reason actually, so it's getting mad that actually people are coming and then participating in this best tenders. We stayed away in the reverse action. We have participated almost all the tenders we participated, but we have stayed away in the reverse action because it is going beyond some certain threshold levels. That first question, your answer is, I think margin levels will remain same from last quarter to this quarter, because actually if you see that this procurement has to happen actually prior to the execution. After execution, we have to bill it. So most of the materials we procured for this quarter execution. So I think margin levels are intact, are going to be intact in this quarter. In going forward, by adding these new projects and new products, I think we will be maintaining the same EBITDAs and the same PAT levels.
And one more thing, Pranav, you told that steel prices increased from April month.
No.
It's not correct. Actually, it is increased in the last quarter of last year. Not only steel price, if you see on the cable prices also, there is almost an increase of 17 to 18% in the last quarter.
There are actually two reasons for this increase. One is, like normally like seasonal, and the other one is owing to this, the present geopolitical situations. Those increases in the seasonal one, since we know the pattern, we have managed. But of course, when those coming out of a geopolitical scenario, we've actually slightly staggered our deliveries, wherever the costs are very abnormally high.
Yeah, most of our contractors are actually, few contractors are pass on and few contractors are fixed. So, for that, your third question.
Exactly, third question is correct. So for fourth quarter, whatever billing we have planned, Pranav, for that already orders are placed on the suppliers within the budgets. So as confirmed by our CMD sir, mostly first quarter we will not have any dip on the EBITDA. We are sure that we will be maintaining the same EBITDA levels. Hope this clarifies your question.
Yeah, done.
Thank you. We'll take first questions from the line who have not got the opportunity to ask the questions. The first question will be from Venkatraman Seturaman. Mr. Venkat, you can unmute and ask, please.
Yeah, thanks for the opportunity, and congratulations to the management for a great set of numbers. I have three strategic questions to the management. Apologies if you have already addressed this. One is, there seems to be a market perception around the oversupply of solar capacity in India vis-a-vis the 2030 vision. How do you see this from your perspective, and how do you see this affecting the prospects going forward? Second, I want to understand the geopolitical tensions. You spoke about the raw material cost impact, etc. Outside of that, do you see those war situations fundamentally affecting in any way or shape for the business? And third, as with regards to the defense, I know you mentioned some confidentiality, etc. Compared to some of the other defense players that we see in the market, like Data Patterns, Zentek, and others, how do you want to be differentiated from the rest of the players out there in the market? What is your envisaged positioning in the market as far as defense is concerned?
Yeah, I think first question I will answer. First question I will answer, and second and third will be answered by our CEO Garu. So this coming back to the over capacity is built by solar. It's first of all that perception is wrong. Actually, it's not so over capacity is built. Actually, capacities are even required. Even that 500 gigawatt to achieve even that 2047. 50% of net zero, 2070, 100% of net zero. It needs a lot of capacities to be built. But intermediately, what we are facing is actually one is that management of that peak hours and non-peak hours, where actually we don't have that grid stability and grid connectivity availability. And second one is storage. These two things are actually very seriously, prominently addressing by Government of India. That is the reason actually a lot of storage projects are coming into the picture. And also grid connectivity is being seen as a very serious impact, and actually where a lot of efforts are being put in this central utility transmissions and even state utility transmission. If these two things can be addressed very quickly, I think going forward in next 10 years, actually this renewable energy capacity building is continuously going to be there, and it is required.
Yeah. It's only like perception because of the intermittency of both solar and wind, and then again the grid stability targets falling slightly behind the like renewable energy capacity creation. That overcapacity, what you said, was a short thought that was felt, and I think the government reacted very well. They are actually like augmenting the grids. They are actually going for smarter grids. And then all these, like best projects that are coming in are basically for getting the grid stability. But otherwise, if you look at the, the Government of India's 2030 target, or even the 2047 target, or otherwise the net zero, targets, we need actually much more. And then going to your second question about the geopolitical scenario. This is not actually directly not going to impact us because most of our products, they come from the eastern part of the world, or they are actually like indigenous products. The only thing that comes through these geopolitically, sensitive area present geopolitical are basically petroleum products. Marginal impact of that particular one. And hopefully even that is also going to get, sorted out shortly. Then coming to the how different we are going to be as compared to the other defense players, one significant difference that we already shown is in the very first year of our, coming into the defense area, we bagged our first critical component order, which we are going to execute in the next 2 to 3 months. And that's a very significant difference as compared to the other companies who took some time to actually mark their first revenues. And coming to the other part, how different we are going to. We are actually to come in to make our space in the defense segment. We are relying more on inorganic growth, wherein we are in the advanced talks with another weeks away. We are going to acquire or like going in for merger of a few companies, 3 companies to be very precise, with substantial the intellectual capital. They will be coming in, and we will be simultaneously working on meeting the small products requirement to medium subsystems requirement while working on the development of like independent products for direct use by the defense services. That is how we make a distinction with others.
Thank you, sir. We'll take the next question from the line of Mr. Surya Nayak. Mr. Surya, you can unmute and go ahead, please.
Yeah, Thank you, sir. To understand the
Mr.
am I audible?
Suryanarayan, can you speak a bit louder, please?
Yeah. Okay. Thank you for opportunity, Satya. So one question is that what is the data centers, wallet share we are targeting? If you can give a 1 megawatt of data centers capex, and in terms of RTC and sale, what you have described.
Yeah. What the arrangement between us and like Bryanston is actually two outcomes. One with the Bryanston is to have like ready to build data center parcels, means that the land for meeting the requirement of like hyperscalers, along with these connectivity, and then also grid as well as data connectivity. And then the subsequent ones for us is that we build shells over that for a ready to deployment data center. Again, for like hyperscalers, hyperscaler is anything between a few megawatts of capacity, which generally comes in 20 to 40 acres of land.
Okay, so then what is the wallet share, especially, I mean, in terms of RTC and sale? Because that is the arrangement, but generally what we target for other data.
Surya, your voice is not clear actually. We are not
not able to understand your question.
So what is the wallet share? What is in terms of, let's say, capex for the data center around whatever the amount is? So what would be the our share we are targeting out of that capex?
It's all actually, we are not present to that. It's because actually it is a multi-billion requirement of data centers. But actually, our activity here is actually to start with 2 gigawatt, 3 gigawatt of data centers. Megawatt. So 2 megawatt and 3 megawatt of data centers. So each megawatt is coming maybe around 35 to 40 crores of our scope of work actually. So that is the kind of sizes that we are starting. Maybe we can go even up to the 10 megawatt size of the data centers. Again, we are talking about capex. We are not putting any capex in this actually. We are making it ready and then giving back to the hyperscalers. So we are not going to sit on any capex in long term. Very short term, maybe for 6 months or maybe up to 7-8 months actually, we are going to create this and handing over to the data center operators.
Thank you, sir. Since we are overshooting the con call time, I would request the management to give a closing comment if they wish to.
Yeah, I think it means that is over.
Yeah, it's over.
Okay.
Question and answer session is over.
Okay.
Thank you,
We
Vinay.
can have
Our CMD Garu will be giving his conclusion.
Yes.
Thank you very much for taking all your busy schedules and participating in our earnings call today. And thank you very much for that very qualitative questions. I hope that actually we given answer for all of the questions, and some of the observations are there in our presentation in the stock exchange that we will look into that. And also, if any further information is required, you always can reach us to one-on-one, so that actually we can clarify furthermore. And thank you, Kaptify team, for arranging this call, and thank you all. Thank you very much.
Thank you, sir. All the participants can log off now. This is the end of the conference call.